Jay is head of Insight Benefits, and he's here to talk about ways small businesses can save on their health care insurance costs. I might add that two studies that I've seen in the past 2 days indicate that rates for on health care insurance will go up in 2015, no matter what happens. But I'll leave that to the real expert. Jay, welcome to the program.
Thank you, Don.
Jay, we start off every guest by asking them to tell them a little bit about themselves personally before we get into anything else.
Very good. Well, I live in Bloomington, Illinois. I'm married, got 5 kids, and I'm a CPA and by training. And if being a wrestling coach would pay me enough, I'd probably do that. That's kind of my hobby, is working with my sons in wrestling and watching my daughters in every other sport that they do, volleyball and soccer and everything else. Besides work and chase kids, that's about all I do.
Well, raising 5 kids is a full-time job, and I envy you for it.
Yep.
But now, Jay, you're here because you and I had such an interesting conversation a few days ago that I was hoping you'd come by and talk about Obamacare or the ACA Act and what's happening and how small businesses can prepare themselves this year and find ways of reducing their health care benefits costs. So with that, I'm going to turn the microphone over to you.
Very good. Well, I think some of the biggest, there's a lot of misconceptions out there about the marketplaces and the health exchanges, which are synonymous. I mean, they mean the same thing there. And everybody's looking at the government exchange, healthcare.gov. And what they don't realize is that there are private industry exchanges that can do everything healthcare.gov can do, but obviously much, much better. My analogy is always, you have the post office, which delivers packages, but then FedEx and UPS obviously do a very good business. There's a real good reason why. They obviously provide better customer service, better pricing, more options. When you're driven by capitalism and not government funded, there's a very different incentive, as we all know as business owners. You get real serious about how to get customers, how to keep them happy, and how to earn a profit. And so where small businesses are probably missing out, because I don't see this on TV shows and the news, is that they can access private exchanges for their employees, and they're really a pretty good deal. I mean, there's some options there.
Well, that's a start. But you indicated to me that, for instance, you have one, and we're going to talk about that. But there are strategies small businesses can use to not only reduce costs, but actually provide, in many cases, better health insurance for their employees. Could you elaborate?
Absolutely. Basically, what's going on in the industry, because you're seeing, one of the biggest, I think, concepts that people don't understand what's happening is that now all the insurance for individuals in the United States and small businesses under 50 as of January 1, there is no medical underwriting. And we use these terms, medical underwriting, and I think most people don't even know what that means. It means they don't ask you any health questions. It doesn't mean it means if you're dying of cancer, you can go get a policy today, and they're not going to ask you any of that. They're going to say, what's your date of birth and what's your zip code, and this is your price. And you could be a marathon runner or you could be dying of cancer, and your price for premium is the same for individual policies and groups under 50. There's no medical underwriting. And so for a lot of reasons, that's going to drive up the cost of what we call fully insured policies and group health policies and plans, which means A fully insured plan is one where you just pay premium to Blue Cross Blue Shield or Aetna, Cigna, or Humana, and they give you a policy. Those prices are going to skyrocket. So what's happening is that everybody's going to some kind of self-insured model of some sort. You know, if you're 50 and over, you've got a lot more options, 50 employees and over, then you're going to go totally self-insured in some way, shape, or form. You're either going to be self-insured on your own, or you're going to be in some kind of a captive insurance model where you can kind of share risk with other small employers and reduce your costs substantially. Now you can control your costs just like you would in every other aspect of your business. You know, somebody goes to the doctor and there's a $100,000 claim from a hospital and you're self-insured, guess what? You can fight that. And these self-insured and captive models, that's all built in. They don't just pay the $100,000 claim like Blue Cross or these big carriers will. They'll go in there and say, wait a minute, that should be $10,000, not $100,000. And when they do that on these self-insured models, then that reduced that claim from $100,000 to $10,000. That's a big difference, and those differences are that big. And see, those big claims are not getting fought by the big insurers. They're going ahead and paying those claims, and then they're turning around and just raising your premiums. And so pretty much everybody 50 and over is going to go self-insured or a self-insured model, and there's 2 or 3 different ways you can do that. You can either be partially self-insured, totally self-insured, or go to a captive model, captive insurance model, where you kind of share risk with other small employers. And that's going to substantially reduce your costs. Very, very few small employers today are going to go to fully insured products. The prices are just going to get way too high with this whole guaranteed issue, no pre-existing condition laws that have now come into play. 50 and under, they're all going to drop their plans eventually, and they're going to send all their employees to the exchanges because they're actually hurting their employees if they don't. If a small employer today offers a affordable plan to their employee, that employee now no longer is eligible for a tax credit or a subsidy. And so what small employers don't realize yet, and they will, it will take a year and a half or so, but the affordability test is determined on the employee-only portion of the premium, but the tax credit is built on the family, the total premium you would pay. And so you may pay half of an employee-only premium, which is, say, $200 a month. You know, say the employee-only total premium is $400. You as the employer pay half of that, which is $200. But that employee says, hey, I need family coverage, and they're going to pay $1,000. You know, now you're paying $200, they're paying $800, and they don't qualify for a tax credit because you offered them affordable coverage by paying half of that. Well, if you just gave them $200 in their paycheck and let them go to the exchange, they'd probably get $800 a month in tax credits from the government, and only cost them $200 a month. I mean, you're actually hurting your employees today if you're offering them a group plan for 50 and under. And the 50 and under criteria is because if you're 50 and under, you don't have a penalty for not offering them coverage. So you cannot offer them coverage. Now you'd be penalized. Put the $200 you were paying towards a premium anyway and just put it in their paycheck, and now they're better off because they can take that $200 and go buy something on the marketplace or the exchanges and get another $600 in tax credits per month. So you're saving that employee thousands of dollars, and you're out of the employee benefit business as a small employer. So it's kind of a win-win for the 50 and unders by going to the marketplaces and the exchanges. But no small employer wants to dump their employees on the healthcare.gov because it's a disaster. It's like sending them to the Department of Motor Vehicles of insurance. I mean, it's just a bad customer service experience. And so that's why these private exchanges are available. And we have clients that are actually setting up their own private exchanges, private labeling them, and then they're letting their employees go online and get all the products and prices that are available, plus more, on the private exchange with all the private industry customer service around it versus government service around it. So those are the. Go ahead.
If I understand, I understand it, the private exchanges like yours have more options than does the government site.
Absolutely. Four big differences between a private exchange and healthcare.gov. The first one is that healthcare.gov is a bad user experience in that you have to go on there and set up an account before you see products and prices. And there's a lot of glitches. People get lost, get caught up in it. Private exchanges, you don't have to set up an account. You can put in your date of birth and a phone number, email address, and you can even put test. You don't even have to put your real name, and you can see all the products and prices in less than 2 minutes. And so it's a better user experience in that respect. Second big difference is that there are lots of insurance companies in the United States that are not participating on the federal and state exchanges. You go to healthcare.gov, you're only going to see the products and prices that are being offered on the exchanges. And there are a lot of products being offered off the exchanges. And so you get both options in a private exchange. You get on and off. Third thing is you're going to get all the other products that employees are looking for. Right now, small employers, you offer a group plan. Typically, you're saying, hey, I've got dental, vision, disability, other things that if you want to buy that on a voluntary basis, you can do that too. So on those private exchanges, you can do the same thing. Hey, go on here, get your health insurance, and then go get your dental, vision, disability, life, whatever else you need for you and your family as well. Healthcare.gov is strictly health, and it's only on exchange health. So it's only companies that offer products on the exchange. So you got more health options, you got more non-health options, and the fourth big difference is obviously the customer service. You're going to get professional insurance analysts, because it's private industry, that are going to be offering expert advice and knowledge to the employees versus a government employee that's maybe been trained for 2 weeks and has no incentive to really help this person. An example is this. There are some other options besides go buy a policy on the exchange. Some employees would be better off buying catastrophic coverage, which don't qualify as buying insurance, so they'd still pay the penalty. But guess what? The penalty is $95 or 1% of your income. So for a person making $20,000 a year, that might be $200 for the year as a penalty. Well, the difference in premium online, for a bronze plan might be $400 a month, and a catastrophic policy might be $100 a month. So you got an employee that simply can't afford that online coverage, that's mandated by the government. They might be way better off just saying, look, I'm just going to buy the catastrophic, pay $100 a month, buy an accident policy in case something happens because I'm pretty healthy anyway, and then I'll just pay the $95 penalty or $200 penalty. Well, a government employee is not going to tell you that at healthcare.gov, but a private industry person is. So those are the kind of differences you're going to get between private exchange and public exchange.
Well, let me go back a moment because you mentioned catastrophic insurance, but does that qualify as insurance under the ACA?
It doesn't. You would pay the penalty still, which for 2014 is going to be $95 or 1% of your income. So for a lot of people, if you're going to buy the ACA compliant coverage, it might cost you $300 or $400 a month. But if you didn't buy coverage at all, your penalty, let's say you make $30,000 a year, your penalty will be $300 for the year, not $300 a month for the coverage. So you could still get better coverage by buying a catastrophic policy at $100 a month. Buy an accident policy so that you actually have better coverage in case of an accident because you're a pretty healthy person, and then pay your penalty. Paying the penalty isn't the worst thing. It's actually cheaper than buying that ACA mandated coverage. But again, government is not going to tell you that, and you're not going to have that option. You get a private industry analyst on the phone, they're going to say, hey, wait, you're 25 years old. You're healthy. You don't need this $400 a month policy. You can pay the penalty. You make $40,000, $30,000 a year. Pay your $300 or $400 penalty. Buy your catastrophic policy. Buy your accident policy. You got better coverage because the catastrophic policies are actually lower deductibles and cheaper, and they're medically underwritten. And so they're a great option. Then nobody's saying, so you can actually get protection cheaper and just pay your penalty. So there's some strategies out there for individuals. They can get great coverage, so employers that want to say, hey, go to the exchanges. For those that are going to get tax credits, they can get them, get the help buying their premiums. And for those that aren't going to get tax credits, that don't want to pay those high premiums, pay your penalty and just go to the catastrophic right. It's kind of like a high deductible HSA type option. That's what it is.
Well, the other thing that you don't factor in, that most of the policies on the exchanges have a $5,000 deductible. So if you do get sick or go to a doctor outside of preventive care, you're still paying out of pocket almost to the $5,000 limit threshold before it kicks in. Am I right or wrong on that?
You're absolutely right. You're absolutely right. I had a case today, and I saw one come across the desk, and it was a 55 and a 56-year-old couple, business owners, and they were in New Mexico. And Blue Cross, if you look at it in New Mexico, on exchange and off exchange, there's very, very few carriers in New Mexico. I think there was two that we saw. Blue Cross Blue Shield in New Mexico and a company called Presbyterian. And the reality is that these people were going to pay almost $13,000 a year, and they had a $6,000 deductible for a 56-year-old couple. I mean, it was ridiculous. And so, fortunately, and here's the other thing, is that they had no idea. They're like, I don't want to go to that government program because I don't think I'm going to get covered and have insurance. They don't believe in healthcare.gov, which I understand that. So that's why they came to our private exchange. And, of course, one of our analysts will walk them through. And so these people feel comfortable going to the private sector, and our people walk them through the process. The reality is they're going to get about $10,000 in tax credits because their income was so low as well. But they were small business owners. And so it's going to work out well for them. We can get them some better coverage, get them some accident, get them some hospital indemnity type programs so that they don't have to come with that $6,000 out of pocket if something in fact does happen.
Well, let's continue a little bit. The first figures out from Health and Human Services indicates that young people are not buying the policy. That a significant portion of the policies are being bought by people 50 and over who couldn't either couldn't or had high premiums. But young people are simply not buying it. As someone said to me yesterday, young people, they don't buy insurance because they think they're immortal. And they don't buy life insurance and they don't buy health insurance, either because they can't afford it or they don't think about it. But for the rest of us, as we pass 30 and perhaps get children, etc., it becomes a very important. It's second only to buying a house and buying a car in terms of decisions, in terms of monetary decision. How do we get people to understand that there are alternatives to the ACA, etc.?
Yeah, that's it. Insurance has gotten such a dirty word right now. It's got such a bad name, and ultimately these people need to understand that it's nothing more than personal risk management. You're just protecting yourself financially. That's all it is. And they don't want to go naked without any insurance, but certainly they can manage that. They just got to understand how to manage that risk. And the young people, they're not going to buy this expensive stuff, because the bronze plans are too loaded with too much stuff that nobody needs. It's ridiculous. That's why I think the young guys are all go with the catastrophic type policies. High deductibles and build in an accident policy. They're not even going to want a hospital indemnity. they're not worried about getting sick, but they are going to fall off their motorcycle or break their leg going down the ski slope. So, they're much better having a $5,000 or $10,000 deductible and then get a $5,000 or $10,000 accident policy. So if they did have an accident and they went in the hospital and their bills were more than $5,000 or $10,000, the accident policy covers 100% of that. Their out-of-pocket exposure is actually zero if they have an accident, and they're totally covered. And that's what they're missing. That's what the whole healthcare reform is missing as well, is the personal responsibility too. That's a whole too long a conversation to have on here, but we deal with health insurance all across the United States, and groups, larger groups that we deal with, we're getting really serious about helping their employees get healthier and healthier because that's how they were managing their costs. At the end of the day, the only way to have lower cost insurance used to be, because they were all medically underwritten, was to have healthier employees, which was a good thing. Everybody was motivated to get on these wellness programs, which are all controversial, whether they work or not. But at the end of the day, that is the only way to reduce your costs. You got to have healthier employees, and they got to know, what's going on with their health plan. And so, every Fortune 500 company in the United States has had a wellness program. They got fitness centers. They got all that stuff, and they have it for a reason. They're not stupid. They know that they have to help their employees be more health conscious, make better decisions, and to be healthier. Small employers got to do the same thing. When you're a small employer and you get a really sick person on your health plan, it's a group health plan, it's medically underwritten, that'll kill you. I've seen groups go from standard rates to max rates because one guy comes on and he has Mad King's disease or something I've never even heard of before, and it max rates the whole group. And so small groups have to be so careful about what they're doing. If they're 50 and over, you're still going to be medically underwritten. You just got to be very conscientious about that. It's a slippery slope because of all the ERISA, issues, and you can't ask health questions and things like that. But it's a big issue. So
the name of you have a private exchange that people can go to right now, and if I understand correctly, they can. At the end of it, they can even get an idea of how much the government will subsidize based on their income. Am I right?
We do. We have one. It's VIP, like very important person, VIP, healthmarketplace.com. And, that's our generic website that anybody and everybody can go to and access in the United States. It's available in all 50 states, and they can get any on-off exchange, health, and then everything else. We have. If you're.
Well, I have to tell you, in the time since we talked, I've sent 3 people there, and all of them agree. They have been frustrated with the government website and went to yours, and we're very pleased with the results. So that's why I invited you on the program, because we try to test out everything before we bring anybody on, and they were very impressed, and I was. So give the site again, please.
It's VIP, very important person, VIP healthmarketplace.com.
And if they want to talk to you or email you, how can they do it, Jay?
My email is jjensen@insightbenefits.com. That's INSIGHT benefits with an S.com.
Jay, I'm really glad you came on the program. I want you to come back in a couple of months as the things unfold, and we'll talk more about it.
Love to. I appreciate it, Don. Thank you so much.
No, thank you for coming on board.
Thank you.